Hi there. This is my second video about how to use my mobile stock trading help desk app. As promised, this time I'm going to describe how to use my app to handle a situation when you're expecting that the stock price for a company is about to move downwards. The company I'm going to use to describe in my example is 3M with ticker symbol MMM. To get some disclaimers out of the way, I am a former employee of 3M. The scenario I'm going to describe is completely hypothetical and it does not mean I have some ill will or malice towards the company. I myself do own some stock in their company and have some good returns by investing in that company. When I started working for them 3 years back, the share price was trading around $130. Today it has reached almost twice that price. I'm confident that in the next 3 years, the stock is going to maintain the upward trajectory. However, as we all know, there is likely to be some ups and downs on the way there, and a lot of it is going to be centered around the quarterly earnings report every 3 months. In the last video, we saw how to trade a stock when you expect price is going to go up after an earnings call. Today, we are going to see how to be successful in the opposite scenario when you expect the share price is going to go down after an earnings call. Like last time, we are going to answer the 4 important questions to execute a trading strategy, which are when to trade, what to trade, how much to trade, and for how long. Let's get started. First off, as we can see, 3M's fiscal year is January to December. That means they must have just wrapped up their fiscal year and earnings report for the full year is expected to be announced shortly. Let us see when that is. Looks like it's due in the next 20 days, sometime around 22nd of this month. Also, from the chart in front of us, we can see that during Q3, the stock started around 234, went as low as 228 and then as high as 242 and then finally settled down a bit higher to close the year at 235.37. Again, I did not have to keep watching for when the earnings are going to be announced. Since this stock is on my watch list, my app automatically notified me by way of an earnings alert. This answers our first question, when to trade this stock, sometime before January 22nd. Now, before we go to the remaining questions, I would perform some research using the Stocks app that comes with the iPhone. Let us say I did the research and concluded that the earnings is going to be somewhat of a bad news this time and hence expect the stock to trade lower after the earnings call. Armed with my conclusion, I'm going to use this experiment button to pick my strategy. This time, let's say I own some stock in the company. So my position is long stock. I expect the price to move downwards. And now the strategy I'm going to describe is called stock repair. As we can see at the bottom of the screen, to execute the strategy, I need to be long 1 April 240 call, which is going to cost me $610, and I also need to be short 2 April 230 calls, for which I'm going to be getting $2,270. So I will have a net credit of $1,660 into my account from this trade. This answers the second question, what to trade. Now let us review the payout matrix for this trade as shown in the chart. As before, the x-axis tracks the share price and y-axis tracks the net profit or loss from the trade. This time, as we see, there are 2 lines. The dotted line is for my existing position, which is the long stock. It is pretty much linear, showing a direct gain or loss from the price movement. If I do not take any steps, my portfolio is going to lose value when the share price moves down after the earnings call. Now let us look at the solid blue line, which is the return from my stock repair strategy. This has an interesting trajectory. It rises when the stock price goes down and goes into negative territory when the price goes up. I also see that the green zone for the simulation shows that if the earnings news is negative, I could make anywhere between $586 if the shares close at exactly the same level as today, to a max of $1,660 if the share price drop anything to 227 or below. On the other hand, if the share started moving upwards, I'm going to start losing money. I break even occurs when the shares hit 238.3, and anything beyond that I delve into the negative territory. Now for the third question, how many? Like before, this is completely up to your affordability and risk appetite. These returns are for 1 long and 2 short positions. You're free to double, triple, quadruple, quintuple your bet as you please. Finally, to get to the last question, how long? As we have seen historically, the shares are not going to trade linearly in one direction. The market forces are going to nudge them up or down constantly according to supply and demand. But as we can see, the maximum reward occurs when the price hits 227. To know when that occurs is the watchlet functionality. I go to my options tab, come down to the April options, and then down to 230. I come here to 230 call, and then I just pick I sold it, and then for the 240 call I say I bought it. Now that's it. Now just like I get an alert for earnings, I'm going to get an alert for when the stock moves, and when the app automatically notifies me either when position is about to expire or when the maximum payout is reached. I don't have to keep watching the stock price. Once I get the notification, I can come here, collect the reward, close my positions, and move on to the next trade. In the next video, I will describe a scenario for how to trade when you expect the stock price to not make a major move in either direction. Suppose you expect the stock to just move sideways. Bye now.